Good morning and happy Tuesday. Welcome to the first Tuesday of the month of September. We're back for another Tax Talk Live. Every Tuesday at 7 a.m. Central Standard Time, we come to you to discuss a business, a tax, or a finance related topic. Okay, and it's every week at 7 a.m. Central Standard Time on Tuesdays. And so on today, I want to give you the opportunity to go ahead and share this live. Go ahead and share this live in some of your favorite groups because what we're going to talk about is going to be very helpful for you and for people who you may know. So I'm going to go ahead and I'm actually sharing this live to a few groups at this time, and I want you to take the opportunity to do so as well. All right. And while you're doing that, I'm going to go ahead and introduce myself to you. I'm Chastity Grady. At Grady Tax Plus, it is my mission to make sure that we are keeping the IRS out of your pocket so that you can live a better life. Why? Because you deserve it. And a lot of times we are unable to live the life that we deserve or desire to live is because the IRS is on our back, right? It's because the IRS is on our back. So on today's topic is actually going to be on we're going to talk about three IRS letters that you need to know about and why. So these are three letters that you don't want to avoid, three letters that you don't want to ignore. These are three letters that if you were to receive them, you want to make sure that you are doing what you need to do to address them, okay? In general, generally speaking, you never want to ignore or avoid an IRS letter, right? Just in general, right? You never want to avoid it. And I know at times whenever we're checking the mail, we don't want to see that Department of Treasury at the top of the paper of the envelope. We don't want to see that unless it's a check, right? Unless it's a refund check that didn't get directly deposited into our bank account. Otherwise, we don't want to see anything from the Department of Treasury. But there are times where the Department of Treasury, aka the IRS, the Internal Revenue Service, they will send you a letter, okay, or two or three. And the three that I'm going to talk about today, these are ones that we got to pay close attention to because if we don't, it can hurt us, okay? It can hurt us later on and make our situation worse. So the first topic or the first letter I want to talk about is the CP 2000. CP 2000. And so when you look at IRS letters, it will always have a letter type at the very top. It will either have like a CP or LT something. And so I'm going to talk about CP. So the one I'm talking about right now is the CP 2000. At the top, it'll say a CP 2000, okay, like the number 2000. And if you ever get a letter like that, you might get really mad at the person who prepared your tax return if it wasn't you. Because oftentimes this letter means that either your tax return was prepared wrong, something was missing, it was a clerical error, or something of the sorts. Now, many times this could be that if you prepared your return, maybe you left something off. Maybe you forgot to report a W-2. Maybe you did not report a 1099 because you thought it was insignificant. And so this is a auto-generated letter. This is a computer letter, okay? CP 2000. It is a computer-based letter, which means that the IRS system, it took your tax return and it compared it to what is already in their system. Okay. And a lot of times we think that, oh, we don't have to report something because the IRS won't know. Well, if you got the W-2, if you received the 1099, then guess what? The IRS actually received that as well because the companies have to file that with the IRS. Okay. And so the IRS will take what they have on you. They'll take all your W-2s, they'll take your 1099s, they'll total their income up. And if, let's say, within their system, it shows that you had $50,000 worth of W-2s, you had $20,000 worth of 1099s. So that means that you should have $70,000 worth of income reported on your tax return. And so when they get your tax return, they're looking for that $70,000 to show up. And let's say you have the $50,000 worth of W-2s, but you only have $10,000 worth of 1099s, you are missing $10,000 because when you file your tax return, it's going to show up as $60,000 calculated, but the IRS they have 70,000 in their system. And so they look at, okay, we're seeing that you did not report $10,000 worth of income. So that's where that CP 2000 letter come in. It's an underreporting letter for you underreporting your income. And what the IRS do is, instead of them saying something nicely to you, what they say is, you didn't report $10,000. Now you owe us an additional $5,000 in taxes. And they'll give you a time frame on when you need to respond to this. Now, many of you might see that letter and be like, "Oh my gosh, my tax professional did not do my taxes right, or I didn't do my taxes right because I did them myself. What am I supposed to do? The IRS says I owe them $5,000. Let me just go and pay it." And that's not what you want to do. Okay, and the letter also tells you that this is not a bill. The letter actually tells you this is not a bill on the letter. So if it's not a bill, that means you don't have to pay right away. So what do? Okay, so what you want to do is you want to make sure that whatever the IRS has, so the IRS they will show you the breakdown of your income. They will show you the 1099s, the W-2s, or whatever it is. They will show you that, and they will show you at the bottom what is missing. And if what is missing, if that needs to actually be on your tax return, then of course you will go ahead and have that amended. Now the thing is that you might think that, okay, well, the IRS, they kind of corrected it, so I should go with what they say. You never really want to go with what the IRS says, because the IRS is not 100% correct. And another thing is, they do not prepare your tax return to your benefit. They do not prepare your tax return to your benefit. So if you owing that additional money in taxes, if that took away some of your credits or anything like that, then you won't have that on the correction that the IRS did, because typically they will take away your credits, they'll take away some of your deductions. And if you rightfully are supposed to have those credits, or you are rightfully supposed to have those deductions, then you want to make sure that your return, that amendment, if you do amend or whatever you prepare to the IRS, you want to make sure that that is including the things that you're supposed to have, right? Especially if it's a 1099, because if it's a 1099, especially if it's from self-employment income, the IRS, they don't have your information regarding any business expenses or tax deductions that you qualify. They're not going to put that on the return because they don't know that. And so that's your opportunity to go ahead and add that information or provide it if it was previously missing, which will help you lower your tax bill. Okay, which will help you lower your tax bill for your benefit. So that's the CP 2000. Now, if you've been following my post yesterday I had a whole thread about CP 2000s. And actually, the case that I provided the letter example for was someone who prepared their own tax return and they had left off a W 2. But that W 2 in court, according to the IRS, yielded them needing to pay an additional $6,000 or so in taxes. Well, ironically, my client, even though she did receive a W 2, that W 2 income wasn't taxable based off of the tax law that applies to her particular situation. So sometimes not all W 2s are created equal. So as a caregiver, she received a W 2. And like I said, not all W 2s are created equal. That's why you have to, if you're going to do this, you have to know the tax law, which I always recommend. You never address your IRS letters by yourself. You always hire a professional like myself to assist you. And because I knew the tax law, I was able to prove to the IRS that actually she doesn't owe anything. She was rightfully due the refund that she received, and basically she owes you $0. And if you followed my thread, you will see the last letter that I post show that the IRS says, we are pleased to let you know that we have resolved this case, and your balance is zero. You owe us nothing, right? So she went from owing, or believing she owed that 6,000 and some dollars, to owing zero. And 6,000 and some dollars may not sound like a lot of money to you, but for this particular client, it did, because she was a caretaker for her son who was disabled. And so she didn't have a $6,000 to just dish out to the IRS, and she didn't know what to do. So for her to be able to save that $6,000, how do you think that made her feel? Right? Now, that came from her preparing her taxes on her own and making a mistake. A simple mistake in when you prepare a tax return like that you have to notate in the software, which is why sometimes I always tell clients too, sometimes people think, well, I don't need somebody to file my taxes for me because I just have a W-2. It's just simple. It well, sometimes it's not just simple. Sometimes it's not just simple. It's maybe it's a tax law attached to that particular type of tax form, tax form that you are not aware of that needs to be accounted for. All right, so that's the first letter, CP 2000. Now, let's say, for example, you received that CP 2000 and you ignored it. You did nothing. Well, if you do nothing, then that's you saying, okay, IRS, you said I owe this additional $5,000 or $6,000. I'm not going to dispute it. You know, I don't even know what I'm supposed to do with that letter. So I'm just going to ignore it and I hope it will go away. Well, that letter now goes into being a CP 14. Okay, CP 14. And so now the IRS has now they said, okay, Jane Doe has accepted that we made some changes to her return, and now she owes us this $6,000. Now we're giving her the bill that she owes us this $6,000. Because remember, that CP 2000 is not a bill. It's just letting you know, hey, we noticed this. You will owe us this money if you do not dispute this or disagree with us. You will owe this. So now it has converted into a CP 14, which now says, okay, we accept that you are accepting that you want to pay us this $6,000. So here is the bill. This is the first notice that this is what you owe us, right? Now, this is something that you also don't want to ignore either, because let's say that when you received that CP 14, you were like, oh my gosh, I didn't realize that they were really serious about that first letter they gave me. So what can I do now? Because actually, now that I'm looking at it, I don't think I'm supposed to owe the IRS this amount. I don't think I was supposed, or not as much. You know, maybe I was supposed to owe them something, but maybe not the full amount that they said. So what can I do? Well, if you haven't ignored the letter for too long and the statute hasn't passed for you to be able to make changes, then you are still able to make an amendment to that return in order to make those adjustments if it's still within the window of time, right? So that's why when it's like that CP 14, it's like that first letter, like, hey, this is your first bill that you owe us, right? It's not a scary one of those scary notices, right? It's just saying, hey, you owe us this money. This is how you need to pay us: by mail, online, okay? mail your payment, or send it to us online, right? That's what they're telling you in this letter. And so, like I said, in relation to that CP 2000, if you are someone who maybe ignored that letter and you got the bill with the CP 14 and you want to make changes, then that's your opportunity, because it's still kind of early. Typically, that CP 14 letter, it typically comes within a few months of that previous letter. So you may still be within the window of time depending on when you initially received that CP 2000, because sometimes that CP 2000 might come 2 years later. Sometimes they've been doing good about sending it within a year after you filed that tax return, but typically it's within like 2 years, and you have a certain window of time that you can amend a prior tax return. Okay, so CP 14. You can also receive a CP 14 if you have just regularly prepared your tax return. There is no issue with your tax return, and you just owe the IRS money. So you will also receive this letter, CP 14. You will also receive that notice if you prepared a successful tax return, meaning there's no issues that the IRS has spotted. Then you will get that notice as well that's saying, hey, this is your tax bill. Now, the thing with that CP 14, you may notice that it has penalties, and you may notice that it has interest on that. And so because of that, the reason why you don't want to ignore it is because if you qualify to have your penalties removed, that's something you want to get with a professional like myself in order to assist you with, because those penalties, that's just extra money that you have to pay to the IRS, right? And we don't want to pay the IRS extra money, right? Our goal is to keep the IRS out of our pockets. So if we can save ourselves a few thousands of dollars, then of course we want to do that. So So yeah, so you don't want to ignore that CP14, and then also you might also get that letter because you owe the IRS. That like I said, that is going to be the first letter that they send you that you owe a balance, and this is how you can pay us, right? And that is your opportunity to be able to get the payment plans that you think you qualify for, or go ahead and pay in full if you have it, or set up just a normal payment plan where you end up paying the full balance all at once. Good morning, Melissa. Again, but that CP14 is not the scary letter. It's not the, we're knocking on your door tomorrow letter, but it is something that you do not want to ignore. Now, the last letter I'm going to talk about is the CP504 letter. Now, this CP504 letter, now this is the scary letter. Okay, this is the Michael Myers, this is the Jason, this is the leprechaun, if you're afraid of leprechaun. This is that letter. Okay, so we talked about CP2000. With the CP2000, let's say that you did not report any income, or you misreported some of your income, and the IRS says you may owe us this balance. You did nothing about it. So now the IRS sent you the CP14 that says, okay, now you owe us this money. You still did nothing about it. It's past the window to make any corrections or adjustments to that return. Now it's getting to a point to where, like, the IRS said, hey, we told you about us. We told you about you underreporting money to us. We told you that you owe us a balance. We gave you a couple of times to let you know that, hey, you owe us this money now. And now the CP504, now that's that letter where you like you, that's like your emergency tax letter, right? Because it says on there, final notice, intent to levy. And when you see that, it triggers in you, like, oh my gosh, the IRS, they weren't playing about the previous letters that they sent me. They were not playing about the letters that I was ignoring and avoiding. Now they're talking about coming into my bank account, coming into my wages to take money from me. What do I do? Now this is the letter out of all of them. You definitely don't want to ignore any of them, but this is the letter where you're like, okay, I can't ignore this. I actually have to do something about it, because if I don't, the IRS say they gonna take the money from me. And if you don't believe fat me greasy, you gonna believe it when they take that money from you. Okay, so that's not the letter you want to ignore. So when it comes to that CP504, this is the final notice. They says we are going to levy your accounts if you do not pay this balance now. Okay, this letter says that you need to pay the balance now. That previous letter, it was just letting you know, hey, this is the balance. Pay us by this date. Do something by this date. It'll give you dates on the letter. But this one, the CP504, they don't give you, pay us by this date. They say final balance due now. Okay, like they wanted it yesterday when they printed the letter. And so, like I said, this is one that you do not want to ignore, because if you do ignore this letter, then the IRS do escalate your case at that time to where they can send letters, send a notice to your employer and or to your bank in order to get the money that the IRS says that you owe. Now, this can feel very devastating. This can feel very scary. Like I said, this is the Michael Myers letter. Like, they're literally putting fear in you to scare you into you giving them the money that they say that you owe. Now, going back to the first letters that we talked about, how if you owed, let's say the IRS projected that you owed them something, but you really didn't owe it, and we've passed the window to where we could make any corrections or adjustments to what you should have been able to pay the IRS, or maybe pay nothing at all, like there's nothing we can do now, you're stuck with this balance, then there are some options for you at this point. At this point, what we could do, well, let me say this. In order to stop the CP504, in order to stop an intent to levy notice, the ultimate way to stop it is that you do have to have some kind of agreement in place with the IRS. Okay, unless you have some kind of agreement in place, whatever that agreement looks like, unless you have some kind of agreement in place with the IRS, they are not going to put a halt on their own of putting an intent or intending to levy your bank accounts or your wages. Okay, so you might think that, oh, okay, oh, because I called the IRS, or because I was trying to call the IRS, so maybe because I didn't get through, maybe they're not going to do anything about it. No, if you have not established some kind of agreement with the IRS, their actions to go ahead to levy your bank accounts or levy your wages is still in motion. Okay, that does not go away. They're not going to keep sending you letters and letters and letters giving you warnings that, hey, 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 they've already done that. It says that was the final notice, balance due now. Okay, those words mean something. So they're not going to give you another final notice. They're not after that, because that is the one. So again, in order for you to officially really stop the intent to levy is if you have an agreement in place. And let's say, for example, in our example we've been talking about, you are past the window where we can make any adjustments or corrections to your previous tax return, and now you're stuck with this balance. Well, there's a couple things that we can do. Typically, for clients of mine who are not able to pay the full amount on a monthly basis of what the IRS says that you owe them, then what we would do is we would do a financial analysis. And in that financial analysis, we will see how much can you afford to pay the IRS based on your facts and circumstances. And those facts and circumstances consist of your budget, right? Your budget within the IRS guidelines. Now, we talk about budget when it comes to our business finances, and you're making sure you know your personal budget. We talk about that all the time. But there's a different budget that the IRS has. The IRS has guidelines based on where you live, your zip code, and the size of your household, your family size. They say, based off of this is how much you should be paying a month of your mortgage, a month of your rent, your car note, your food, all of that. They say that, and then we compare that to what your income is, and we look at the deficit. Okay, we look at the difference. And so based on whatever that difference is, that will let us know, okay, based off of this, you can actually just pay the IRS about $50 a month. And they, by law, if we've done this correctly, they have to accept that you can only pay them $50 a month, not the $500 a month that they are saying they want from you, right? That's something that we do in our financial analysis. And so I always like for us to do that, because like I said, the goal is to keep the IRS out of our pockets. So even if the IRS says, hey, pay us $500 a month, pay us $1,000 a month, and even if you can afford that, but you don't want to, then why would you? Why would we give the IRS $1,000 a month when we don't have to? Because based off of our analysis of our finances, we can just pay them $50 a month, and that satisfies our agreement. That satisfies the IRS not going after our bank accounts, not going after our wages, right? So that's one of those things. That's what it looks like, trying to keep the IRS out of your pockets. People set up their own payment agreements all the time, but why pay the IRS extra, right? Why pay the IRS extra? And you could have had that extra money into your pockets. You could have had that money in your pockets versus in the IRS. Because like I said, as long as you're satisfying that, hey, by law, I'm legally set up on the payment plan that fits my needs. Even if you said I was supposed to pay 500, 1,000, but based off my needs, I can only do 50, and you have to accept that, and you did accept that, then I don't need to pay you anything extra unless I want to, and I don't want to. Okay. So that's how that works. Okay, that's how that works. So we talked about the CP 2000, we talked about the CP 14, and the CP 504. Now these, like I'm telling you the letter names and numbers so that you can have that as part of your vocabulary, right? Don't be an individual who have IRS letters and you're like, I don't know what this is. I don't know what they are, so you know how to act. If you see a CP 2000, you're like, okay, the IRS, they see they see an error. We need to correct the error, or we need to make some adjustments, and that's okay. They just gave us a warning. I'm cool with that. And then that CP 14, okay, now they're letting me know that I owe this amount. It's not due tomorrow, but I do need to set up a payment arrangement, or I need to start making payments. I need to do something so that I can be in good standing. I can sleep good at night. And then lastly, that CP 504, this is the one where if I've ignored the IRS, I kept pushing those letters on wherever you put your letters, I kept pushing them to that letter box and ignoring them. And then now I have this final due notice. that the balance is due now. I need to do something about it now, right? So if you are someone who have an IRS letter, if you have a CP 2000, a CP 14, or a CP 504, regardless to what those deadlines are on those letters, go ahead and schedule a consultation with me. Okay, go ahead and schedule a consultation with me so that we can see how can we best help you. And if you're on Facebook, I just put my calendar link in the comments so that you can schedule a consult so we can see how to best help you. Now, typically, all of my cases, majority of my cases start with us doing our IRS investigation. And when we do our IRS investigation, that's us gathering all the facts. We collect your letters. I call the IRS. I get all of your transcripts, and I put all of this together to see what is the story saying. What is the picture? What am I being told? And based off of that, I get your complete resolution plan. So you'll have a complete resolution plan where, hey, based on the letters, based on what the IRS told me, because your transcripts doesn't tell you everything that the IRS know. They have notes on your account that you don't know about. And when I become your power of attorney, I have access to being able to get those notes. So once you make me be your power of attorney of your tax account, I can get that information for you. So once I get all of that, now I can say, okay, here, our resolution plan is that we do this, and we do that. And we move forward with making sure that you're in compliance with the IRS, which helps you have confidence, which helps you be able to sleep good at night, knowing that you don't have to worry about them trying to come for your bank accounts, come for your wages. And you can start back living a better life that you deserve. So if that's you, like I said, I put my calendar link in the comments on Facebook. If you're on TikTok, definitely send me a DM. I'll get you taken care of, and also follow me. So I put my calendar link in the comments so you can schedule a consultation with me. If you're someone you're like, hey, I need to get started right away with my investigation. I need you to go ahead and to look into my account to see what we can do about this, then I'm also going to leave the link in the comments so you can get started with the investigation. And the investigation is a very low price at this time for the month of September. So you want to take advantage of that. You want to take advantage of that. You can definitely get on the phone with me. If you want to talk to me first, that's cool. But at the end of the day, we're still going to start with the investigation anyway. So if you want to just go ahead and get started with the investigation, then I'm leaving that comment and I'm leaving that link in the comments for you so we can get started. All right, so I hope this live blessed you. I hope you learned something about the IRS letters that you could receive and why you would receive them and what to do about them. Obviously, we never want to ignore IRS letters because we never want to get to the final notice. The goal is to never get to the final notice, because when you get to that final notice, that causes anxiety. It just causes so much other issues. And it's okay if you did receive it. Trust me, I love a good 504 notice. I love a 504 notice. So if you have one, I would love to be able to assist you so we can stop the IRS immediately. Okay, because I have ways where we can stop the IRS immediately without even setting up a payment agreement. And so if that's you, let's go ahead and get started, because listen, we don't want them coming into your bank account. We don't want them actually in your bank account, or if you still work a full-time or a part-time job and IRS have access to those wages, we don't want them to get that, right? We don't want that. So definitely get on my calendar as soon as possible. If you want to bypass talking to me because you've already watched this live, you've already seen my content, and you know that I can help you, then go ahead and book your investigation. And like I said, I am going to put that in the comments as well. So I hope you enjoyed today's live. I will be back next Tuesday at 7 a.m. Central Standard Time for our Tax Talk Tuesday. If you are following my Fire Your Boss series, our next live is on Friday, this Friday at 7 a.m. Central Standard Time. So I'll be back on Friday as well. And I hope you have an amazing Tuesday. Again, share this live with somebody who needs to know about the 3 IRS letters that they should not avoid, that they should not ignore, and what to do about it, so they can know what to do. Okay, don't let your people stay in the dark. Don't let your people be in the dark when it comes to dealing with the IRS. I know it seems scary. I know it might seem, frightening, but it actually is not. What's more frightening is you ignoring. That's the most scary part, is when you ignore. But when you are doing something to address it, you're hiring a professional like me to have power of attorney over your tax account so that I can see everything, so I can be involved. I can give you the hands-on support that you need, and you don't have to do anything. You don't have to lift your finger with the IRS. You don't have to be on the phone with the IRS. You don't have to deal anything with the IRS once you give me that power of attorney. And so if you want to have that level of security, if you want to have that level of support, then I'm here for you. Like I said, it's my goal, my number one goal, to make sure that we are keeping the IRS out of your pockets so that you can live a better life because you deserve it. You deserve to live a better life. So again, I will see you back here next Tuesday for our Tax Talk Tuesday. We will be still talking about IRS letters. There's some other letters that I want to talk to you about, and I will see you next week.